Yep, I'm just doing a little broadcast for our unusual option activity. So,
I've always been taking these of yours and then drinking them but not putting them in the fridge so they're refrigerated. So she went through two. I mean, she's upgrade. I'm so sick of it.
so there you go, folks. My wife complaining about our daughter. It's a daily occurrence. But nonetheless, bang, let's head into 3 at 3, 3 p.m. Eastern Time. Every day we bring you 3 at 3. And let's get into it. First, the disclaimer, and that is that this is provided for educational and informational purposes only. Please be aware of that. Somebody else is probably your financial advisor. You should talk to them before you invest. Today, by the way, it is Monday the 27th of April, and at 4 p.m. Eastern Time, 3 p.m. Central, we've got Jeff Mackey, the Lone Wolf. I should have had my wife give me that because she's got the wolves down at the Lincoln Park Zoo howling as an ambulance went by. And those wolves apparently big fans of the sound of those sirens. But anyway, we do have the Lone Wolf. That was Jeff's nickname on Fast Money. And he is, of course, one of the brightest traders that is out there and obviously really knows retail cold. So we're going to have him and chat with him about retail. He's going to have some of his cartoons that he does as well as charts and all the rest. Tune in at 4 p.m. Eastern Time, just about an hour from now for that. And you got to register if you want it live. You register, you can ask questions as well. We try to get to as many questions as we can, but you have to register. It is free. So just go to marketrebellion.com and sign up. All right, with that, of course, we're about to do unusual option activity. You have more questions about that, check out marketrebellion.com/UOA, which is unusual option activity. I'm getting some right now. In fact, I'm getting a fill. Bang. Love that. Few things better, folks, than getting a nice fill when you're lucky enough to be doing a trade. So, with that said, let's get into the rest of this, shall we? All right, let's take a look at LVS because I did LVS last week, as you might remember. We had it for unusual option activity last week, and this one made a fantastic move. In fact, Friday, LVS was just under $44 a share. 14,000 of those June 50 calls traded. Everybody's like, oh, Vegas is never going to reopen. They will reopen. They are going to come back. When? I can't tell you exactly, but I know they're making a comeback. I think I told many of you on Friday I spoke to a PR agent who is working with some of those casinos about what they will be doing to make it as safe as possible, to keep social distancing, maybe even to have plexiglass between players on slot machines and things like that. A lot of things they're doing to modify because of COVID out in Vegas. Anyway, June 50 calls, an awful lot of those traded. Well, that was with the stock under 44. You see where it closed on April 24th. Then you see it gapping up a little bit today into the just over 44 range, and then zoom to the upside and through 48. Bang. Love to describe those when we have that. This is what those calls, which by the way, again, those June calls were trading for, let's see, $1.90 to $2.25. I think we said, let's say roughly $2 at that time. Well, today they're still at $3.20. So you had a $120 profit on a $200 investment. How do you like that? Because every option is for 100 shares of stock, folks. And the high of the day, $3.80. So nearly a double. I did take off half my position. No, I didn't get $3.80 for it. I got a little over $3.45. And I like taking that off. Now, some of you may say, well, but John, you always say, hold on until it doubles. Well, yeah, but this was a pretty extraordinary move, and it happened in one trading session. So I do modify where I take profits and where I cut losses. For instance, if I got into a call today and that call, I paid $1 for it and all of a sudden it falls to 70 cents, like really fast like that, maybe I say, you know what? I'm not going to ride this thing down to 50 cents, which would be my 50% drawdown. I'm going to get out of it now because maybe I'm just on the wrong side. Maybe I followed the wrong money instead of the smart money in. So cutting losses and taking profits and pulling that off the table is how you win more often. And if you're a card player, you already know what I'm talking about. Keep the odds as far into your favor for as long as you can, and then you'll be a winner in this game. All right, fresh meat, 3 at 3. Take a look right now, folks, at what's going on with the activity that's working its way through Snap. Now, Snap has been an outperformer, as you can see, because we had it in the middle of April, April 13th. We had it when it was $13.33. They were buying at the money calls, 13.50s. Then look at it 4 days later. Stock had eased a little, traded back down to $12.96, and yet they were buying 13.50s again with abandon. Well, Friday, that trade worked out pretty well. Now, those calls have expired, the April 24th. But if you take a look at the top of the sheet right now, 12,000 calls that expire this Friday, the 1st of May, traded mostly for 18 cents as high as 40 cents. So what does that mean? Well, that's 1.2 million share equivalent, folks, because 12,000 options, since every option is for 100 shares of stock, would be 1.2 million share equivalent. That's what they're controlling. Now, you also see that they paid 18 cents. That's $18. If they paid 40 cents, that's $40. So 12,000 times, call it what, 30 cents? 12 times 3, you know, when they put out $360,000 like bang into one trade, that's why I follow that. So how did it work out? Well, let's see. That was at 16.16, and that was at about 12:30. In other words, during the halftime show. Here it is as it trades through 17 and is presently at $16.78 moments before I started the show. So 1678, we already have a winner here, folks. Winner, winner, chicken dinner. And we are enjoying the ride in Snap very much. Thank you. Let's take a look at the next one at our 3 at 3. This one would be JCI, bullish call buying. So these aren't options that expire this Friday. These are options that expire at the end of May. So we're, of course, coming up on the end of April right now, so these are 1 month into the future. So the information that's contained in this trade. Number one, bullish call buying. They're buying calls. Almost 3,000 of those calls. Now, they also told us time frame. Do they want it? And did they buy it because they think something's happening tonight, tomorrow? No, they bought it and they want a month's worth of time on this trade. That's the second bit of information here. The third bit is that these calls that they're buying are at the 31 strike with us at basically 28.70. So out of the money by about $2.30. There it is. Look at that nice move, folks. From 28.70, it's just kept going. We're near the high of the day, 29.15 for this one. Johnson Controls, they're buying those 31 calls out there in May. Third trade for our 3 at 3. Take a look at Lulu. Lulu. This is a fabulous one, folks. Pete would have done this one on the halftime report, I think. He was thinking about doing this one, but they didn't get to it because they had a great guest, Jeffrey Gundlach. I love Jeffrey's comments, and I usually enjoy his outlook on bonds in particular, but he trades stocks from time to time. So I pay attention to Jeff about that as well. Again, smart guy, a lot of money, want to be following those sorts of traders. So what were they doing in here? Well, early in the day, in the first 15 minutes of trade, because it's East Coast times here on the clock, they were buying the end of this week, May 1st, 2:30 calls. So let's break it down. First of all, They're thinking they have tomorrow's newspaper today. Why do I say that? Because they're buying something with very few days to go. The theta on these is incredible. Theta is time decay, folks. Time decay on this is incredible because they only have 4 more trading days after today to be right. What did they do? Second thing, they bought an out of the money call. With the stock trading at 218, they're buying the 230s, which, as we both know, is approximately $11 out of the money, because I'm saying it's roughly 219 and they're buying the 230s, so that would make it about $11 out of the money. And they paid between 86 cents and $1.56 for these calls. So the bits of information that are contained here are pretty vital. Well, number one, somebody thinks something's going to happen fast. Number two, it's an out of the money call up there at 230, $11 higher than where the stock was at this time. And they bought a lot of those very quickly. Bang, 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 right after the opening. There's Lululemon. It's traded all the way through 227 today, folks. In other words, those 230s aren't nearly as far away now because the stock is $7 higher than where it was this morning when it opened and they were buying these calls when it was approximately $2, or I mean $2.19. So that's what you need to be aware of in this one. Lululemon, they're buying these calls. We love that they're buying these calls. In fact, they've already worked for us. Take a look, for instance, folks. Like I say, if you want to say they paid $1, or if you want to say they paid $1.25, whatever, on average for these, they bought them, and where did they go? From $1.25 to $3.40. I've already taken profits on this one. Bang! That's 100% profit, folks, in just hours. When that happens, I pull that money off the table. I only took half off, so I'm still riding some. Now, how do I treat it if it starts pulling back? In other words, what if we go, since we still have that clock, that theta is still ticking, if we're looking at where do we go in case this doesn't work out, in case maybe we see a pop today and then it just languishes and doesn't keep trading to the upside, well, then I'll exit the rest. Where will I likely set my exit? Probably around $3, because I paid in the neighborhood of $1.20 for these calls. I more than doubled that money on the way up. And if these pull back to 3, I'll say, out, taking my profits, and I'll move on, look for some fresh meat. Because especially with an option that has time like this, I mean, these two of these trades that I detailed for you are very tight on time. You don't have a lot of it. So you've got to be aware of situations like that you need to be very responsive to profits and very quick at cutting losses. Knock on wood, we're talking about profits here. Folks, I am Jon Najarian. You can join my brother Pete and I with Jeff Mackey at 4 p.m. Eastern Time today. That is basically how long? That's about 45 minutes from right now. You want to join us? Got to register. MarketRebellion.com. Just go there, register. It is free, completely free. We're not going to ask you for a credit card or PayPal or anything else. This is a free conference with Jeff giving you his insights as to what's going on in the retail markets. And nobody does a better job at breaking that down and making it understandable for dummies like me than Jeff Mackey. So make sure you tune in. Maybe you're a dummy too and you need a little insight that Jeff can provide. He is fantastic. That said, I thank you for joining me today, folks. I hope you have a great one, and we'll see you tomorrow for our 3 at